everyone, Charlie here, and in today's presentation I'm going to go over the price action candlestick patterns number 4. We're going to cover the engulfing candlestick. As always, we must start the video with a disclaimer, but when trading any financial asset, there's a possibility you may sustain a partial or total loss of your investment funds. As a result, it is advised you should never invest with or trade upon money which you cannot afford to lose. Trading involves a real risk of loss, and past performance does not ensure future results. Feel free to pause the video and read through the entire disclaimer. But for now, let's get started. What is the engulfing candlestick? The engulfing candlestick helps to define the end of a retracement, and its appearance is the complete opposite of the Harami pattern. With an engulfing candlestick, the second candle body fully engulfs the first candle body. This is a strong signal that the retracement of the trend is over and continuation will more than likely occur. So we see in this example here, these two candles are the engulfing candlestick setup, okay? And this right here is the engulfing candlestick. Now this picture is cropped and zoomed in, okay, but there was an uptrend, okay, that was occurring. And then right here, well even here, we have a little bit of a retracement. And here, so we have the trend going up, we have a retracement down. The trend's going up, kinda, this is more consolidation, I guess, really, because this is the daily time frame, but you could call it retracement because it does come down some. We have a rise in the market again. And then we have this retracement, and right here is that engulfing candlestick. And as you can see, the body of the first candlestick is within the engulfing candlestick. Now sometimes you'll notice that they're right around the same line, I guess. In an uptrend, it'd be the bottom one. In a downtrend, it would be the top. They might be kind of aligned with each other, but that body is still within the engulfing candlestick's body. Okay. At this point, we would wait for the full formation of this candle here. Okay, the engulfing, and we would enter slightly above that candle. Okay, our stop loss is going to be at the previous support when you're in an uptrend. Okay, so that previous support is right here. So you can see the candles hit it, come back up, hit it, come back up, hit it, come back up. So it'd be the exact opposite. Okay, be the resistance line in a downtrend. Okay, but as you can see, we had a little bit of consolidation the next day there, and didn't really break that, and then we came down and boom, broke through, and then that trend continues up. Okay, that's kind of how it works. Now I have some more examples for you too. But how do we trade it? The engulfing candlestick is traded best when the market is in a defined trend. Okay, for example, if the market has been in a downtrend, the appearance of the engulfing candlestick could be an indication of the continuation of the trend following a retracement or a rise in the market. In this example here, we have a downtrend. Price comes up. That's our retracement, okay, or our rise in the market. And then here, right here is the first candle of the engulfing candlestick, and here is the engulfing candlestick, okay? So we'd enter slightly below, or you could enter at the bottom of the tail. It's completely up to you. You find what works best for you. But you definitely want to wait for that full formation, and if it ends like this, you could always just enter slightly below the body there. And then we have our continuation of the trend, with our stop loss being at the previous resistance, which is right here. And if you have downloaded the file pack, then you have this template in your MetaTrader 4, and these little dots, these show previous support and resistance, so that really helps to know or to set your stop loss. So in this example, see those dotted lines right there? That's where your stop loss will go. Okay. So here's some examples for you. Okay. In the example to the right, we see an example of the engulfing candlestick following a defined uptrend. Our expectation is that there will be a continuation of the trend following the dip in the market. At this point, we would go long just above that second candlestick, or the engulfing candlestick. Our stop loss would be just below the previous support level. So here is our defined uptrend. It's occurring. Okay, we've had some dips in the market. Okay. But right here is where we have the engulfing engulfing candlestick. We actually even have one right here. Didn't even see that one. But this is the one that I did the example of. So here's our first one, and here's the engulfing. So you can see the body is within this body. Slightly above that is where you would enter long, and your stop loss would be right about here. You see that dotted line? It just gives you the answer. It's pretty easy. You don't have to have indicators. It's just if you are newer to trading, or if you have not, if you just don't feel comfortable, pointing out support and resistance yet, then this is a great template to help you out. It's called the I think it's called the price action template in your file pack. And remember, these are on the daily time frame. Okay, you can trade all these candlestick patterns and the previous price action series. You can trade those on lower time frames, really any time frame of your choosing. But the daily time frame is much, much better. Okay, you're going to have a higher win rate, less stress. You don't need to be at the computer all day. Okay, you can go in once a day and check it out. Okay, set an alarm for when the market is done, and take a look at 5 to 10 assets and see if they've set up. Okay, it's really a good way to do it. So in this example to the right, we see an example of the engulfing candlestick. This is following a defined uptrend. Again, our expectation is that there will be a continuation of the trend following the dip in the market, or the retracement. At this point, we would go long just above the engulfing candlestick, and our stop loss would be just below the previous support. So here is our defined uptrend. Okay. Here we have a little bit of consolidation. And then we have our engulfing candlestick, and that is this one right here. As you can see, the body, this one, is within this body. We would set and go long just above, or like I said, you can do it at the body too, at the top, just above the body formation there. But you can do it either way. Okay, whatever you feel more comfortable with. Your stop loss would be at the previous support level. Okay, and this time it looks like we didn't have a dotted line for support, but there wasn't a big retracement either. It was more consolidation than anything. I mean, it came down a little, but we had a pretty heavy rise in the market right before that. Okay, you would not want to set your stop loss way down here. Okay, not on a daily time frame. You'd want to set it probably right around the bottom of this candle body. Okay, or you could do slightly below here, but I would probably personally, if I would have seen those set up, would have set it right around here. Okay, but then we have the continuation of the trend. Okay, one more example for you, and this is an example of an engulfing candlestick following a defined downtrend. Our expectation is that there's going to be a continuation, and it'll be following the rise in the market or the retracement. At this point, we would go short just below the engulfing candlestick, and our stop loss would be just above the previous resistance level. So here's our defined downtrend. Here's our rise in the market or the retracement. Here's our engulfing setup. Here's our engulfing candle. This body is within this body. We will go short, either just below the entire candle, including the tail, or just below the body. Okay, and right here, just above there, is where you would set your step loss. Okay. And as you can see, we have the continuation of the trend. Beautiful. Pretty easy setup to spot, especially if you're just checking, like I said, once a day. So, in our next lesson, I am going to be covering the piercing line candlestick pattern. I may include the dark cloud cover as well in that presentation, or I might break it up into two, see as I kind of go along with the PowerPoint and what would be the easiest to follow. But you guys have a great one, and I will see you in the room. Talk to you later.